Hey, welcome to Dawn Investments. Today's video is going to center around just 5 basic chart patterns we feel as though every investor should know. Just a brief overview, chart patterns, if you don't know, they're used in technical analysis, can be very effective, and it help you notice patterns quickly so you can buy and sell at appropriate times. And, if you don't see chart patterns often, try switching your time interval from 1 day to 3 day or 1 minute to 5 minutes, stuff like that, and you're bound to see some of these patterns come up. The first one we're going to go over is the head and shoulder reversal. This reversal basically starts at one selling point, and then you go up, you build the left shoulder, you go down to the support, build the head, go down to the support, build the right shoulder. When it's above the support like this, it's a sign of a downward trend reversal, because if the second shoulder dips with accompanied by volume, a lot of volume, that can be a bad sign that the stock is gonna go down and break the support and just keep dropping to who knows when. You can also have the opposite, where the head and shoulders just be low the support line. In this case, it's the same thing. It'll show right here that if it's about to break that resistance with a lot of volume right here, it's a good sign that this stock is gonna soar up. This is time, and if you're buying it or something like that, I would say get in right here. If you see upward momentum, you notice this pattern, I would say definitely get in right here. It's best to get in right here at the right shoulder, but if you just to be safer, I would say get in at the resistance. The next one is a double bottom reversal. It forms a W. This one, you see it a lot. It's kind of common. It's right here. For this one, the bottoms are kind of at a support. It doesn't show it in this picture, but basically what happens is it comes down and then goes up a little bit and then comes down for a second bottom, and then from there it goes up towards a previous resistance or even past it. Some tips for this pattern is after the first bottom, the stock should go up at least 7 to 20%. What that means is that after this first bottom, the stock should go up to form that middle part of that W at least 7 or 20%. It doesn't necessarily have to go up that much, but if you're just trying to spot an easy double bottom, it should be at least 7 to 20% higher as it's climbing. That's definitely a good sign, and if it makes that second bottom, it's definitely something that I would jump into. The next tip is the second bottom should only be 3 to 4% away from the first bottom. The second bottom could be at the same support as the first bottom, but it shouldn't be more than 3 to 4% away from it in either direction, because then if it's too much, then it's not really considered a double bottom anymore, and you would have to look into other things. And my last tip for this, you should definitely have a stop loss under the support that this is bouncing off of, because if it breaks the support, whatever the support is at this point right here, if it breaks it, you have trouble, and I would definitely get out of the trade if you were in it. But if it breaks this resistance, I think I meant resistance right here, not support, I'm sorry. But if it breaks this resistance, and it's accompanied by proper fundamentals growth and volume and all that stuff, this is definitely something I would get into as a long position, or just at least maybe even a swing trade or a day trade. But this is definitely a position you would want to get into at this point if it's accompanied by fundamentals. The next one is the ascending triangle. This is a common one. It's pretty noticeable once you figure out how to make trend lines and stuff. First, you make a resistance, and if it keeps hitting the resistance, when you notice that in its forming higher lows, you probably will want to make a trend line of it going up, because this trend line should be touching the lows of the higher low pattern. And once it's there, once it breaks this resistance right here, this little squeeze right here, it just usually squeezes up. If you have an ascending triangle, it'll squeeze up, and you can take lock in profits or whatever, go long, whatever. But if you want to buy, I would say buy right here. Or if you see this happening and you're a little risky, you can even buy it at this low right here, one of these lows, if you're confident that it's an ascending triangle. It's not an automatic buy, but make sure you look at some of the fundamentals, like I've been saying, because the fundamentals are pretty important. Next pattern is the bull flag. This one is like one of the most common, I feel like the most common patterns. It's represented by a flagpole, then the flag here, and then, it shoots up. To trade this, I will buy in this flag position, this period of consolidation. It doesn't have to be this steep like the picture, but it can, it can even be horizontal. It can like go straight up. The flagpole can be straight up, and the flag can be horizontal. It doesn't have to look exactly like this, but this around this idea. Lastly is the hammer. It can also be called a hanging man. This is a signal in like bullish reversals after like a very strong downtrend. This is one of the few candlesticks, the few patterns where it's just one candlestick. When you're trading this, a tip is like if the downtrend was very strong and then you see the hammer, it's maybe a good sign that the upside or the reversal may be very strong. And if this hammer is formed with heavy volume, that's even a better sign. But you should always pay attention to this, what you call a shadow, or the trail, or like this little line attached to the square, because the longer the shadow, the more sellers are drove down that price, and that's always something you should just pay attention to. If it appears as support, is another good sign that's definitely a good hammer. And when you buy it, try to buy it at the candle head, or close, a little bit close after. So now I'm going to show you guys some examples of some of these patterns, just in some common stocks and some real life examples of things I've traded or seen. The first one is one of my swings for this week, IMGN. In this 180 chart, 180 day chart, we see a double bottom right here. Let me zoom out. Sometimes the double bottom can be more prominent. You can even see other things, but this is just like a little, you can kind of realize it from this, but you see how it touches the support, goes up, touches the support again. This second bottom wasn't 3 to 4% away from the first, like the row, but like I said, it doesn't have to do that. And from the support from the first bottom, it went up 10%. So like I said before, you should try to make sure you find something that goes up at least 7 to 20% for like a true type of double bottom. And from there, as you can see, after the second bottom, it went up 67%. It won't always happen like that, but that's like the main idea. The next thing I want to go over is another thing I'm trading is SPHS. This is like a quick, ascending triangle that you can notice. Most of the time when you're trading something, you'll notice these things like that. Well, see, I drew a resistance right here. It was touching resistance, and I saw it was making higher lows. So I drew the trend line, and it made an ascending triangle. Sometimes you'll naturally make it without even realizing it. It's like a right triangle, like this. So here, I saw that was the ascending triangle, and I noticed it might break. Once it breaks this resistance, it might squeeze up. So what I decided to do, I bought it right here because I noticed it was an ascending triangle at 216, and I was right, and it broke the resistance, and it went up 17% so far, and that was really a good swing trade for me, and that's how I used the chart pattern to make that swing trade. And I wouldn't have made that swing trade if I didn't know this pattern, which is why I really like the ascending triangle. Just one more quick one we're going to go over. I'm going to just look at Tesla because I know it definitely had a bull flag. But I don't trade this, but you can definitely find bull flags in any priced stocks. So don't think it's just like really expensive ones. But you can find it in stocks like $5, $2, cheap stocks, or whatever you trade. So don't think it's only Tesla, but this is just the example. In the 1 year 1 year chart, you see a bull flag pattern right here. You see the flagpole going up. It's this little, and these two lines I'm drawing, these two trend lines, it forms a channel. If you guys know that, that's what it's called. But the flagpole, and then here's the bull flag. It went down, so this would have been a good time to buy right here at 244, and then it shoots up like predicted. It shoots up just like the pattern says it would. And in terms of buying it, buy here where you would sell. That's really up to you how much profit you make. So if a company like Tesla, I would say hold it, of course, but because it's like you don't have that much risk trading Tesla. But if it's like a cheaper stock, something with a lot more risk and validity, I would say sell it. Like, not don't wait too long to sell it, but just sell it once you reach the profit that you agree with, or once you're up 10% or something. Just it all depends on how you feel and what your risk tolerance is. So just keep all that in mind. I just want to say one thing about this hammer that I forgot to mention earlier. I forgot to touch on the second part of Hanging Man. The Hanging Man also a hammer, but it's not necessarily a bullish reversal. The Hanging Man is not necessarily a bullish reversal. The hammer is usually at the bottom of a chart, and it shows bullish signs after a strong downtrend like we went over before. But the Hanging Man is usually at the top of a chart, and when you see that Hanging Man, that single hammer looking candlestick, that single looking doji right there at the top, that's a sign that the stock might go down instead of up. So just keep that in mind. If you see this at the top of a chart, just be wary a little bit. It doesn't necessarily mean sell, but just keep that in mind. Most times out of not, the stock might be going down. So just keep that in mind when you're trading. Yeah. So I'm just gonna look for a quick example of a hammer pattern for you guys, so you just know what it looks like. Um, I wasn't a hammer, but this is what the hammer will cause. This is what a Hanging Man will cause. This downtrend. That's what I mean by bearish. And this going up is bullish. If you guys didn't know. Um, this is AMD. It's something that I often trade. It does good. You can swing it usually, but this should have some. Okay, this right here isn't a like the picture, but this is technically a hammer. It was a downtrend. It came down, and it was the body with the shadow. The shadow wasn't that big, like in the picture, but the fact that it wasn't that big is even a greater sign that this is a bullish reversal. If the shadow was longer, like this tail, if it was a little longer, um, the longer the shadow is, the more sellers are there when it closes, and the less of a chance it'll be a good bullish reversal. But since the shadow was low, it wasn't high. That's just a sign that the bullish reversal, bullish meaning it's going to go up, it's going to be good. So here's the hammer with the shadow not that long, and like the pattern says, it goes up right after for a reversal. And looking for a Hanging Man. These are all different patterns, by the way, but in terms of the hammer, uh, this is a this right here isn't a hammer. It's actually an inverted hammer, which has the same role as a Hanging Man. The inverted hammer at the top signals a downtrend going up, and then the inverted hammer was just an upside down hammer with the long tail, meaning a lot of sellers, and there's red, it's a lot of sellers, but the volume gives you that downtrend, just like the pattern says. This isn't the Hanging Man, because the Hanging Man will be like this, will look like this. This is actually the Hanging Man right here, the hammer at the uptrend signaling a downtrend. the bearish trend, and this is the inverted hammer right here, and this is the hangman right here, if you guys want to just see a quick example. But either way, it shows when this is at the top of a trend, just know it is a high chance that it's going to be followed with a reversal downward. So this is when someone should sell. If you see this candle right here, like on your 5-minute chart or a 3-minute chart or whatever, this is probably a perfect time, your best time to sell, because after that it's just going to scale down. And as you can see, for the rest of the day, it never went back up. So yeah, just keep in mind that while you're trading, I feel like hammers are really good intraday. They really can tell you when to trade and when to sell, when to buy and to sell. So just pay attention to that. Yeah. And yeah, that's it for the video. Thanks for watching. If you have any questions or you liked it, just let me know and I can make more patterns, explain more. If you have any questions, just message me or anything like that, and I'll be happy to answer. But thanks for watching. Like and subscribe for more.